All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Carl went through his top three here. They some very interesting setups here. SMH and CF. Take a look here at CLAC, KLAC. This is kind of part of the SMH, and not a lot of volume on it here today. But a very interesting bullish engulfing from a kind of a bullish consolidation pattern overall, similar to something we saw back here in June. Clack, some nice potential there, some interesting price action overall. Another one kind of going in accordance here with CF. You take a look at like Monsanto. Monsanto has same type of action with a bull vibe type of signal here being built into that here. Now, obviously, as Carl mentioned, we're heading into tomorrow with the Fed. Anything can happen. Okay, there are the arguments. We've talked about some of the arguments, but really, anything can happen. A lot of the charts overall still remain bullish, but we do have some serious weakness in some others. Let's take a look at EMC and Halliburton. Okay. And we're going to hold both of these trades. Okay, we're going to hold both of them. EMC here down 15 cents. Came down to supports, bouncing here into the close. Not a ton of volume on this bounce, but bouncing where we need to see it bounce. Essentially, if we start to break today's lows tomorrow morning or tomorrow afternoon or whenever, if we end up breaking today's lows, that would be a very negative sign, and we'll probably put a stop tomorrow as we head into the Fed. We'll probably put a hard stop in on EMC and Halliburton if we still have it. We'll put a hard stop in, but that's probably about where it would be. For now, just came down to support. We still have the bear trap in play. Confirmation of, hey, this is really going to go, or where I would say, hey, this is worth adding to, is above 2380. Above 2380 there for EMC. Now Halliburton, okay, which has been pretty volatile today. Not volatile relative to Halliburton, but really relative to the market. Was up about 20 cents this morning, and dropped, was down 20 cents, and was up 20 cents. Finally kind of gave up, went down, was down about a $1.10 at one point. He's come back about 30 cents off of its lows, 35 cents off of its lows here. Uh, Slightly below the 7-day moving average. Okay, slightly below it. We mentioned the 7, is important. We don't want to see it closing below the 7. But a couple things happened here with that move on Halliburton. Here's our kind of support and our stop. We closed below, this 49.70, 49.80 area. We probably need to look to be getting out. But what happened here is the way that it flushed, it went down so fast, came back down to the secondary support level down here at 49. So far has gotten a bounce off of 49. And has bounced there. Now, could it kind of just weaken again in the morning and continue lower? Yes, that is a legit possibility. And so we're going to hold it here into the close. We break 49 in the morning. We're out, and we'll move on. We looked at what the pricing would be today. If Halliburton got to 48 and the deltas and everything, but we don't want to ride this down to 48, which is kind of where it would likely go if it broke 49 here. If it's able to kind of get back up above 49.70, 49.80 tomorrow ahead of the Fed, we'll go ahead, we'll slap a stop on there and move on out as it warrants. But yes, we do have a bearish engulfing. Yes, in 2013, some of these have acted bullishly. No, do I expect that it acts bullishly all the time? No, but we are dealing with an oversold stock with some pretty good valuations, some pretty good long-term technicals. In the short term, though, that's our risk, and that's how we're going to play that there. Okay. Wick. Yesterday's top three. Okay, Kihu. This had a trend rider bear signal yesterday. Carl talked about it and talked about some of these other breakdowns that Kihu has had, how it's kind of dangerous for a snapback. I have on my notes written, hey, buy Kihu if it closes above 80. Before I had over this last week, I had buy Kehoe if it closes above 85. Obviously, have not gotten that. Still haven't gotten that above 80. It's still in a bearish mode overall, and but if it starts to push above 80, that's where I kind of say, you know what, buyers are probably stepping back in enough to send this to a new high here. Okay. Yeah, Best Buy. Best Buy had a nice little bull vibe signal yesterday. Really hasn't done anything today. Ahead of the Fed here. Best Buy, has a nice little pattern to it overall. You are dealing with a gap, okay, and Carl knows that I hesitate when it comes to trades that are dealing with gaps like this. But that said, you know, take a look at CAM. CAM had this gap, trend rider bull signal, and is flying. Okay, just because they have some of these big downside gaps doesn't mean they always will be weak. So Best Buy had a nice vibe bull signal in the midst of this gap. Everything is still intact there as long as it holds on to kind of yesterday's lows, and chances are it'll start moving, with the Fed here tomorrow. Okay. And then GM. GM has very bullish technicals, very bullish fundamentals, outperforming the rest of the sector overall. Yeah, is it high? Is it maybe overbought? Sure, but the trend is so strong. The overall momentum continues to be so strong. There's really no reason to short this. It's kind of, hey, you hold on, you ride this with whatever you want, the 7 or the upper Bollinger, and kind of continue to ride up there here with GM, and in many ways very similar to Facebook. Okay, was asked about Facebook here today, and look, continues to close in the upper band. There's no reason to really pull that off. Is it overbought? Sure. Are some volumes building? Yes. Can it keep going higher? Sure. I mean, they've had some good news to kind of justify some of their movement. Okay. One of the things that stocks will do as they are on upward trends is they will have some sort of uptrend, and then they will steepen that uptrend. So we'll kind of, it'll go up on a kind of a normalized uptrend, and then there'll be something that happens and that uptrend steepens. Facebook is in that steepening trend. The steepened trend is typically the last stage before the fall. Okay, but it's a giant game of chicken. The trend is steepening, the trend's going up, and yeah, it could go all the way to 60. It could go to 65. It could steepen even more. But once that breaks, it'll fall, and they tend to correct pretty aggressively. So that's kind of with Facebook. Keep an eye on this kind of this steepening trend. Is 54. If it were to break 54, I'd get pretty nervous. But other than that, it still continues to be to be pretty strong there. Okay. Yeah, Huma G. Whole Foods, thoughts on the tight bands. CEO will be on Kramer tonight. Okay. As far as the CEO being on Kramer and that affecting the trade, there's a lot of numbers about all that. People do studies on that, and most of them are inconclusive on whether Kramer has an effect or not. Okay, so as far as the Kramer effect, I'm going to kind of discount that. As far as the chart here on Whole Foods, okay, we're dealing with a beautiful trend rider bull signal. We have a little bit of elevated volume, RSI moving above 50, MACD in a positive position. Okay, you have everything you want to see for a nice trend rider. You are dealing with a downside earnings gap. Okay, you're dealing with a downside earnings gap that can kind of be a little bit dangerous. But like I said, I showed you Cam, and Cam had a trend rider bull in the midst of a downside gap, and has exploded higher. Whole Foods from just a fundamental standpoint, if we kind of come in here, the valuations are a little bit rich. From just a pure valuation standpoint, forward PE to growth, but their growth has been pretty consistent, and it's been consistent enough, and for us to say, hey, it may not have a big haircut here at all. Okay, But again, it's a grocery with the earnings negative earnings reaction, a bullish signal. For me, this is something I would kind of stay away from. But at the same time, I can see the upside and wanting to play the upside. And then it's just a matter of managing your risk. And basically, as long as it holds above about 56.40, the risk reward there is pretty good. Yeah, Kramer effect is sell, sell, sell. Yeah, it's interesting. One of the studies, different studies will come out with different day periods and stuff, and a lot of the statistics kind of look like in the short term, like it is a sell, sell, sell in the short term, but from a long term, it's really tough to kind of gauge whether he has any effect. He kind of gets lumped in with the other analyst, when a company gets upgraded or downgraded, and how that affects the stock. Morgan Stanley, nice signal on good volume 2 days ago. It's pulled back the last 2 days on lighter volumes. Trying to hold on to the 7 here today. Still in a bullish trend, still in a bullish mode. This is one of the difficult decisions that traders that we're faced with. Okay, if we have Morgan Stanley calls, in or out right here, in or out. Okay, and the thing with it is, we can give arguments for staying in. We can give arguments for coming out. So it really comes down to your risk reward. Okay, flip a coin. Can it go up on the Fed tomorrow? Absolutely. We can see Morgan Stanley trading above 32 tomorrow. We could also see it trading at 29 tomorrow. Okay, the fact of the matter is that in hindsight, will go, oh, we should have known. But in foresight, it's a coin flip. Okay, so it comes down to what type of risk, do you want to take on here with Morgan Stanley? If it were my trade, I would use the 30-40 mark tomorrow, and I'd say, hey, if it stays above 30-40, I'm in. Moves below 30-40, I'm done. Okay, that's kind of how I would go at that there. Okay. All right, so again, holding Halliburton and EMC here into the close, with Halliburton, if that moves below 49 in the morning tomorrow, we will pop that. We'll pop that off there. Okay. GMCR has had the earnings up. The drop has kind of continued on its upward trend. There's been nothing to erase it. I saw GMCR down a little bit this morning. Buyers started to step back in. It continues to be on its bullish mode. There's nothing. There's no real warning signs here with GMCR. Perhaps, if you want some sort of bearish sign, you could say, well, from a retracement standpoint, the stock has now retraced some of the September-October downtrend. You could kind of make that argument, but you're also talking about a retracement that happened in the middle of an earnings gap higher. So throw retracements out the window. How much do they really matter? With GMCR, if you're riding it higher, I'd continue to ride it with that 7-day moving average. Okay, and then Exxon is similar. I do think Exxon breaks 100. Yesterday was some wild action. Today sold off all the way down to 96. Buyers started to step back in. Could it pull back to 94 and 92 before moving higher? Sure. But there's a strong Warren Buffett effect going on here. It has kind of turned into the darling of the energy group, outperforming the Chevrons, other major integrated oils, the Chevrons and the ConocoPhillips of the world. And so Exxon really has been that shining light. And heading into an end of the year, people tend to want to buy strength, and Exxon obviously the strongest in there. If I were in Exxon, I'd be using 96 as my stop point. If it broke 96, I'd be gone. Okay, that's kind of how I would look at Exxon there. Apple, a lot of conversation about Apple here today. Again, look at the volumes. No real volume on Apple. There's just not a lot here for Apple to kind of trade off of overall. Okay, it's still below the 7. Kind of like Chipotle Mexican Grill. It's a bullish stock that's still below its 7. If it had that nice little reversal above the 7 after coming into a little bit of retracement, would be really nice and would be worth buying into. But for now, they're not quite ready, in my opinion, there. Yeah, JC, we looked at Morgan Stanley here. Morgan Stanley's one that, this is a tough decision. It's right here on the 7, kind of at this little support area. It's sold off on low volumes. It had a nice signal on pretty good volume 2 days ago. It hasn't gone down much, right? I mean, it's just gone down marginally. But, it's something that after the Fed tomorrow, we can see it trading at 32 or at 29. This is kind of where you have to say to yourself, okay, what's my risk? And are you okay with that risk? I mentioned if it were my trade on Morgan Stanley, if I had calls on Morgan Stanley, I'd stay in. If it broke 30, 40, $30.40 tomorrow morning, I'd pop out. That's kind of how I would go with it there. Would I feel super confident that Morgan Stanley's going to bounce here? Well, no. I mean, obviously, you have, an erase the erosion of some of the uptick that happened. You have the Fed on tap. Is this just some pre-Fed selling? Maybe. But you have a lot of variables that are coming, so it's really a matter of managing the risk there. Visa continues to be, all systems go. 215 was the price target that we had talked about here on Visa back when it triggered on the trend rider signal. I still think 215 is realistic. If it were to, probably will gap up tomorrow. Given the overall price action today, you'll probably get a little bit of a gap up. If it were to kind of start trading up above 215 tomorrow, I would look to take it and say thank you very much and move on. Even some of the selling action that came into the close yesterday, it couldn't be overcome there today. Google, I look at in a similar way as Amazon and Apple. They kind of look close, and CMG, they kind of look close, but they're just not there yet. They're just not there yet to say let's get aggressive and we can expect a big move. They just really kind of look in a position of more consolidation than anything. Can they eventually start to move? Sure, but Google last week dealt with some upgrades and went down. Apple last week dealt with some upgrades and went down. And when they're going down on upgrades, it just makes me wonder. Okay, who's left to sell, and let that selling happen. Do I think Google and Apple have a good chance of running higher into the end of the year? Absolutely, I do. Do I think that they are primed for a good risk reward entry right here? Not yet. Just not yet. Okay. AKS, yeah, Ken. AKS still above 6 and still very strong. Still has the breakout here. Still think 650, kind of a conservative target there, overall, there AKS has everything that you want to see there. Okay. Walmart. Walmart here. They've pretty much gone down ever since Black Friday, right? Black Friday, and then it's just kind of been a constant sell. Uh, from a target standpoint here on Walmart, okay, you're looking here and you kind of throw the retracements on. You're finally starting to come into a retracement area. Okay, to where you could say, all right, can we maybe start to dip toes into Walmart here? From an option trading standpoint, I would struggle to kind of be a call buyer right here. I'd rather see somewhere down around 75. I don't think there are any major catalysts here for Walmart as we head into the end of the year. If you want to play retail, I'd rather play retail with FedEx or UPS or with Amazon than I would with Walmart. Per se there. If you kind of go to Target, it's kind of doing a similar thing, just really weak overall. Nothing really lively about it. You even get to something like Kohl's, and there's just nothing there's just nothing really exciting going on in retail here. There's just not a big catalyst for them. We had the Black Friday, and the numbers are out, the numbers are known, and they've been kind of a slow, steady sell off in general. I mean, there are some exceptions. I mean, take a look at Dillard's, a little more high end on the retail side. Had a real nice move October, November, been consolidating. Yeah, can it break down? Sure, but these types of consolidations generally resolve themselves to the upside. Can we see Dillard's go to $100? Absolutely. And instead of trying to bottom pick with Walmart, I'd probably look for an entry opportunity with Dillard's and say, well, I'd rather play Dillard's higher than Walmart overall. Though I don't think Dillard's is a great entry right here, right now. I still think you either need some sort of break and close above 93, or find some support down here around the $90 level. All right. Well, tomorrow, as I promised, we would set up some auto orders for the Fed. Not for the challenge, but just kind of show you how those can be done. We'll be on during the Fed when the market's moving. We'll talk about reaction highs, reaction lows. I'll use that to kind of talk a little bit of day trading. With that, we'll go and see where Halliburton opens up in the morning. If it's able to hold on to that 49 level, we'll be okay. If it breaks 49, we'll pop out of there and move on. And same with EMC. We'll look to set a stop in there, a program stop, so that if the market moves just a little too fast tomorrow around the Fed, we're still protected from a challenge point of view. And regardless of where those trades ends, the challenge will still be in a good position to move forward there. All right. Well, thanks for hopping on. Have a great evening, and we'll talk to you later. Take care.